Alright guys, what's going on? Welcome back to a new video. Today we finally have my strategy, the video where I'm going to teach you guys my strategy. I'm going to reveal how I trade supply and demand. So I know many of you guys have been asking for it, so here it is. So let's just get started. First of all, before I start with the video, guys, and I start going over the strategy and everything, I have to say a couple stuff. And listen to me, guys. Don't skip this part because I don't want to hear anyone in the comments. This strategy was created by Doyle Exchange. All right. I don't know if he's the actual creator, but he's the one that I learned it from. Right. I believe he's the creator. His channel is in the description. He has a ton of content, guys. This is probably going to be the only video that you're going to see about the strategy, me explaining the strategy in this channel. Because I'm doing this to help you guys, but it's not really the content that I want to put out there. If you really want to learn supply and demand, like I did, go check him out. I'm pretty sure many of you guys know who it is. His channel will be in the description. He's my mentor, guys. He's who I learned it from. All right. So that's first thing that I wanted to get off. Second thing, guys, this is not a holy grail strategy. It doesn't mean that you're going to win every single trade. If you're looking for that, please close the video and go find somewhere else a strategy that teaches you a 100% win rate strategy, because I'm not going to be teaching you guys that. This strategy has 60 to 70% win rate, right? Which means that you're going to be winning 6 or 7 out of 10 trades, which is a very good average, guys. If you're a trader and you know that there is not a strategy that has a 100% win rate, you know that 60 to 70 is a good win rate for a strategy. So that's something very good. Third thing that I want to say, guys, the setups that you're going to see here are the best setups that I could find. So I'm literally showing you like the cleanest setups possible. It doesn't mean that it's going to be like this every day. There's going to be days that you will not see any trade setups, and there are going to be days where you're going to be seeing setups, but they're not going to be looking clean like the ones that I'm showing you in this video. So keep that in mind. I'm showing you the cleanest ones so that you guys can understand the strategy simply. Simple, all right. I'm trying to put it easy for you guys. I'm trying to make it simple for you guys to understand. But it doesn't mean that these, if you see these kind of setups like the ones that I'm going to show in the video, go ahead and take it. But many days I'm going to be taking setups that are not going to be looking like this, so clean like these ones, and they're still going to win because still supply and demand. So I just wanted to leave that out there for you guys. And lastly, short thing is that supply and demand is a trend based strategy. So you need a market that is trending, okay? You need a market that is trending to the upside or trending to the downside. When it is consolidating, supply and demand is not really that great. You can still trade it in ranges, but it's not really that good and will get disrespected, or you will lose a lot if you are ranging. So with that being said, just focus on this on the show that we are having on the channel, guys. I have 13 videos here of my trades, and we have only lost 3 days. All right, out of 13 days we have lost 3 days and won 10 days. So that's going to be my results right there to show you guys on how this strategy actually works. So with that being said, now that we're clear, I don't want to hear anyone in the comments saying, oh, but you explaining this and that. Okay, let's just get started with the video. All right, so first setup that we have is gold. All right, now there are major things that you need to be looking for this strategy, guys, and one of the major things that you really need for supply and demand to have like the highest chance supply and demand, um well, first of all, let me show you the difference between a high probability supply and demand and a low probability supply and demand. So a high probability supply and demand is, if you guys know, this is the demand right here, the last bearish candle before a bullish push. That's a demand right there. For the demand to be high probability, it needs to have a gap attached to the demand. Before it reaches the demand, it needs to have a gap right there. So when the price reaches, it fills up that gap, taps the demand, and then keeps going to the upside. All right, what the gap means is an imbalance on the market. So this level right here only had buyers. Buyers who stepped in and pushed the price to the upside, and there was no sellers at this level. So probably if they push the price all the way back down here to around this area to tap the demand, they're going to balance out this gap or this imbalance in the market, tap the demand and then go to the upside. That is going to be a high probability demand. What is going to be a low probability demand? If I can show you guys one, let me see really quick. Okay, a low probability demand is going to be one that doesn't have a gap. Easy as that. All right. So let me see. For example, this one over here. This one is a low probability demand. Why is it a low probability? Because we don't have any gaps. Look how this wicked outside the box and then closed inside. The next one, it didn't have any gap. It was filled up with this one. So now when we come back to tap that zone, like it did over here, look how you stopped the zone and literally kept dropping and invalidated the setup because that's a low probability setup. It is not a high probability setup. All right. It doesn't have a gap attached to it, so it doesn't have any gaps to fill right there on that demand. And the gap, it doesn't have to be because there is a gap right here, right? The gap has to be attached to the demand candle. So this demand candle, the next candle needs to have the gap attached to that candle, to that demand candle. So as you guys can see right here, this is a gap in the market, but it is not attached to the demand candle. So very important for you guys to understand that it has to be attached to the demand candle like it is right here. For example, that the gap is literally attached to the demand candle. It's right next to it. So that's how you need to see it. And another thing that you guys need, again, trending. You need a trend. So in this case, we're looking bullish. And for the best probabilities on your supply and demand, you need to have a break of structure. So preferably a major break of structure, like a major high, like this one, for example. But if you have a smaller time frames, like if you're trading the 5 minutes and the 5 minutes is bullish but the 15 minutes is bearish, and you want to take a higher time frame counter trend setup, and it has inside break of structures like minor break of structures in the 5 minute, it is still valid. But if you can have major break of structures, that is going to be giving you the highest probabilities in your trades. All right. If the price comes back to the zone and it taps the area, never gives the break of the candle, and ends up touching the bottom of the box, so it will be the lowest point of the demand candle, so that wick right there, if it touches the bottom of the box, the demand is invalid, so you don't take any trade. All right, I'm going to show you a trade that becomes invalid in a second for you guys to see that as well. But let's get started with the first one. Again, break of structure, trending bullish, EMAs. All right, I have the 13 EMA, the 50 SMA, and the 200 EMA right here. If you have the EMAs lining up like this, the 13, the 50, and the 200, this is how it's looking good for a demand. If you have a supply setup, if the price is like this, you would like to see the 13, the 50, and the 200. So the 200 has to be at the bottom, in this case for a demand, the 50 in the middle, and the 13 at the top. That is showing you that we have a very good trend to the upside, and we also have the EMAs in confluence for an upside position over here, for a buy position in this case. So let's go. The price goes back and taps the zone. When is it better to, or when do I win the most on supply and demands? When I don't have any candle closures inside the zone. If no candle closes inside the zone, like something like this, for example, that you just wigged the zone and literally went up, it didn't close inside, that is giving me a good sign that buyers are holding this level. Look how they just filled the gap, tapped the demand, and literally started filling orders and going to the upside. So the trade is going to be you enter at the break of the candle. So in this case, on the candle that tapped the zone, we will have entered at the break of that red candle at the top. How it didn't break it, so now we move the entry all the way over here to that top, or that wick right there on that bullish candle. And we're going to aim, the first target is always going to be a 1-to-1, and your stop loss goes under the wick, so, or the lowest point on the demand or the supply, or the highest point in the supply. So it goes a little bit below it. Give it some breathing room, or you can have it a little bit tight. In this case, I'm gonna have it tight, and you aim for a 1-to-1, and you wait for your TP to be hit, and literally you just got hit right there. And you can close on partials and leave runners like that as well. Now let me show you a demand setup that got invalid. For example, we have one over here. Let's put this demand over here. As you guys can see, we had not a major break of structure, but we had a minor break of structure of these highs. And the price came back down over here, tapped the zone. So my entry will have been at the break of that high over there. So that will have been your trade over here, and aiming for a one-to-one. It never broke the candle high with the next candle, but the next candle literally came all the way back down and tapped the bottom of the box, which is the lowest point on the wick of that demand candle. So if it taps the bottom of the box, it's completely invalid. We remove it, guys. We don't enter any trades. If it invalidated and then it goes up, then most likely was a support setup and not a demand setup. So you guys can be clear on that as well. So that is a clean example in there for you guys. Always waiting for a break of candle, or you guys can use get in as it taps the demand or the supply setup, which is aggressive entry, which I don't usually do, but sometimes it is the best options because sometimes it will win aggressive but not win on the break of the candle. Now let's go to the next setup. I have another long position, and then we have two short positions, two supply setups. So this is another demand setup. We have the candle right there, right? We have the gap attached to the demand candle. This is literally the gap right here on the market. We need to fill that out. That's an imbalance, and it is attached to the demand candle as well. So we're just going to be waiting for the market to come back. We also have a break of major highs. It broke this high over here with that wick, if you guys can see it. And we also have the EMAs in confluence, 13, 50, and 200. So we're just going to wait for the market to come back down. It comes back over here. Our entry is going to be if the next candle can break that high, we're going to put the stop loss back here, and we're going to be aiming for a one-to-one. All right. Let's see what the next candle does. So the next candle went up but didn't break the high. So now our entry is going to be at the break of that candle. Stop loss is going to be at the same place, a little bit below the lowest point inside the demand zone. And then we got in right here. All right, we got the entry right there. It came back a little bit, and then the next candle went up a little bit, consolidated, and then hit TP over here. So now we close a one-to-one. You can close full, or you can close partials and then leave runners, which not all the time you're going to get good runners. So keep that in mind. Don't leave runners all the time. Majority of the times I close a one-to-one. So yeah, that is a clean setup right there. Everything was followed up. Now let's jump to a supply setup. And in this case, guys, if you guys are paying attention, this was gold, a gold demand, the first setup that I showed. This was Nasdaq, this is US 30, and the last setup is going to be GBP USD. You can trade supply and demand on anything, even on crypto. So I did this on purpose to show you guys that you can trade different things, and it still works. All right, so now let's look at the supply setup on US 30. What do we have? Let's go back a little bit. We have a supply literally right there. We have also a break of structure. This was the major highs that we the major lows, sorry, that we just broke. And we have the 13, the 50, and the 200. Very good. We are in confluence and we are trending to the downside. So we're taking a supply and we're trending to the downside. That is very good. So we wait for a tap on the zone. It literally taps over here. So when it taps, we're going to be entering at the break of that low, and stop loss is going to go above the highest point inside the supply area. We also have, I forgot to mention, a gap right here that the market was trying to fill out. This gap over here attached to the supply zone. All right, so it came back over here, then started coming back down. It didn't break the candle low, so now the new entry is going to be at the new candle low that we have now, and move it to a one-to-one. Stop loss, we don't need to adjust it because it didn't go higher than the previous high over here, so it still will go right there. That's the highest point inside the supply. And then it broke right here, broke the candle right there. We get in for a sell, and then the rest is history, guys. One-to-one hit, close full or close partials, and then leave a runner. And lastly, let's go to the last setup. This is GBP USD, a forex setup, a forex pair. So we have a trend to the downside. We have the 13, the 50, and the 200 in confluence. Very good. And we also have a break of structure right here. That was a low that was broken over here, and we left a supply at the upside. that you can see it right there, which also has a gap that we still need to fill out. Like at this point, we still need to fill out. If you go back a little bit, like when the supply was created, the gap is from that supply candle to this candle right here. That is a gap that we need to fill out, or an imbalance on the market that we need to balance out, of course. So we're just going to wait for the market to come back to our supply. It goes back over there. It taps the zone and doesn't close inside. That is a good sign. So the entry is going to be after this candle closed. It's going to be right there if it breaks the low of that candle. Stop loss goes above the highest point inside the demand, the supply, sorry, and then you aim for a one-to-one once again. Next candle literally went all the way back down, and two candles after that we had TP smacked. So super simple, guys. Let me know in the comments if you have any questions. Again, this is not the holy grail. It is not a 100% win rate strategy. But if you master it, I guarantee you guys that you will have 60 to 70% win rate. As you guys can check out on my videos, there is a lot of other content that I have uploaded, guys, which you guys can learn from as well. And you also can go and visit Doyle Exchange on his channel, guys, which is the person that I learned from, and you can learn in there as well, guys. So with that being said, thank you so much for watching the video. I will appreciate if you leave a like, subscribe, and I will see you on the next one. Peace out. Take care.